So then this is a process question, but had the most upvotes. Can you discuss your process or philosophy for taking losses when a trade goes against you? For example, I've seen you ride some trades down 4 or 5% and then hold them waiting for the reversal, but other times you cut losses very quickly. Any thoughts or guidance here?
There's definitely I'm not a philosopher, Bob. So I don't have a philosophy on that. It has to do with, again, thinking through what is my catalyst. That's generally it. So if I keep something on and they haven't reported earnings, for example, now again, there are companies that can go against you, but they still have to give you your catalyst. So those would be more typically like if I stay with something like Medallia, which is against me in real-time alerts. Now again, it would be against me less if I was trading it appropriately, because again, I can't trade Medallia because that would be a conflict of interest with our clients. But if something goes against me, there's a lot of different decisions that you can make. So if we have like our typical long-short setup here, longs versus shorts, we have 6 as our max on the long side, 4, 2 starter positions, try to get to that, 3, 2, 1. So on something that's a short, typically I'm adding to these 25, 50 basis points at a time. Okay, 25, 50. So if something's going against me, like I said, if I'm at 1.5% on Brent oil, then I'll probably take that to 2.5% today. I'll get close to my max. So if that's going against me, it's, again, real-time alerts is a bugaboo if you don't know what the hell you're doing, right? I mean, so again, it's just an indicator on what I'm doing in the moment. Like I wouldn't get so caught up on like signal 1 or signal 2 or when I stop myself out or not. If I stop myself out, Bob, it's typically because we're changing quads, for example, and I'm not shorting oil anymore, which is not what I'm going to do today. I'm going to short oil because we're still in deep quad 4. We've had a classic, epic bear market bounce. I look at oil volatility; it's still at 76. All the math says sell more. So that's how I'll take up a short position that's going against me. Whereas something like Medallia, which has just been going against me, they haven't had to report reality. And you've had this big bounce across tech beta, so it's been a recipient of that. I'm sure that people have been frustrated with it and covered it a couple times, or even just given up on it. So again, I'll wait for the catalyst, or I'll wait for something that changes. Sometimes I'll just stop myself out because some people, again, know that I just like to trade it intraday. I like to take small losses, because again, taking small losses is usually a leading indicator of not taking big losses. So a lot of the small losses you see me take are basically like in TLT. Like I got huge gains in treasuries, but on the most recent edition of RTAs, I had a little loss. Well, that was a little loss that was worth taking, right, Bob? Because it would have been a bigger loss this morning, right? You see what I'm saying in terms of like just helping you risk manage the range of core positions. So hopefully there's a lot to that. There's no philosophy, so to speak. Rule number 1, try not to lose money. That's typically what I think about it. I don't think of it as a philosophy. I think that's a pretty good rule of thumb and a way to live your life if you're risk managing from the short side in particular.